a system that just ain't right. Gonna tear it down, gonna start a fight. Anarchy and numbers is my game. I'm the investor with no shame. Greed and corruption, that's the name of the game they play. It's all a shame. I won't play by their rules, I won't comply. Anarchy's the way. It's time to fly. I'll burn down the walls and break the chains, shatter the illusion.
And here we go. Welcome. I am Matt. This is the Anarchist Investor live, coming at you every Monday through Friday at noon Eastern, talking about contrarian investment, markets, the economy, how to protect and grow your money without it getting stolen by some dirty banksters. Happy Monday, everyone. I'm going to pull down the banner. And what I had on the share screen while everyone started to filter in is the 2-year yield. It is a feeling of rate cut in the markets. I can't put it any other way. There's just this feeling of, and a lot of people would say that it's anticipation of rate cuts for bad reasons, and as it should be, because the economy sucks unless you're in a very small portion of the income earners right now. And yeah, that's kind of the flavor of the day, because the rate cuts, I think everyone is just waiting for that shoe to drop. They're just waiting for the news of the rate cut. And quite frankly, there's some weakness in the casino, and it will continue to be weak until the baby gets the candy that it's crying for and throwing the fit for. So will Papa Jerome Powell open up his pocket and provide that candy? Well, we'll see. Might happen this month, might not happen for a month or two. It's my anticipation that if the European Union cuts, they're going to cut because they know their economy is weak and they need the support, and they know the global economy is weak. Specifically, everyone looks to China. Whenever the Western world has a problem, is China going to be able to fix things? Well, I'm not so sure that China's able to do it, nor do I think that China is willing to go to the same extents that they have in the past in order to try and stimulate economic activity in China specifically, which then has that knock-on effect to help the rest of the world, so to speak. Yeah, I don't think they're going to those lengths. And so I think Europe sees that. I think they're going to cut, despite the fact that they're still, a little high on the inflation-o-meter. And I think you're also going to see the United States follow suit, whether it be this month or next month. So today definitely has that feel to it within the market. Before we go through the market, we have something else to attend to, and that is I have to give away 4 annual paid memberships to the Anarchist Investor Substack. So if you're unfamiliar, there is a Substack that also goes along with this daily program. You should definitely be subscribed regardless, but every month I give away something. This month, it's annual paid memberships to the paid side of the Substack. So you can be a free subscriber. You get articles every Monday through Friday on the Substack. It's basically comes to your email. So it's essentially an email newsletter that, you get something, a little nugget, little morsel every single day of the week that I pen myself. And on top of that, there's a paid side where you get other exclusive benefits. So there's a couple of articles. Some articles are only free for a short period of time because they're just so chock full of information. Then after that, they become paywalled. Typically, the first little bit of it to give you an understanding what the article is free, and then the rest of it is paywalled. So you get access to those. You get full commenting privileges and everything like that on the articles, regardless of what article it is. And then on top of that, you also get access to the model portfolio that's being built right now. So you'll get to see, what I'm looking at, but not just what I'm looking at, also what I'm kind of putting money to work in. And anyone who's unfamiliar with my kind of like philosophy, I am a value average kind of guy. I believe in taking small chunks every single month, being routine about it, but being calculated about it. So when things are overvalued, you buy less or maybe even none, and then you reallocate the funds you normally would have paid towards that investment to something else that's either a little bit more correctly valued or even undervalued. And we love the undervalued stuff. Speaking of which, I have an interview that I just finished editing with the great Lobo Tigre from the Independent Speculator. I will be dropping that tomorrow night. So that's a reason to subscribe here on the video platform or the podcatcher platform of your choice. But on top of that, you should be subbed to the Anarchist Investor on Substack. So anarchistinvestor.substack.com. So without further ado, that was like a really long commercial read. I'm sorry. But without further ado, I am going to give away those 4 paid memberships, annual memberships. So if I can get the share screen to work correctly, I will show you, just for transparency's sake, the spreadsheet that I'm using to basically randomize. If you notice, I have a list of an email list of subscribers here on the left. I have random ordinals here on the left that have been assigned to each one of those subscribers. And so it is 1 to 61 this month for the giveaway. So I will pull that down. Just so I'm not broadcasting everyone's emails to everyone else forever on this video. But what I will do now is share my screen with random.org. This is how I use to, this is what I use to basically pull into the hat and take a number out. So we have, let's see, 1 to 61. So when I hit the generate button, I will get a number between 1 and 61, and that means we will have our first winner. I'm doing 4 total polls. So let's go with the first one. And should I do a drum roll? Generate. Number 10. Who's number 10? Let's see. Radical Press PR gets the first annual paid membership. Each one of these is worth $99. And so you can be a paid subscriber, either $10 a month, or if you pay the annual, it's $99. And so you save some money. So a $99 paid membership goes to Radical Press PR. All right, what's the next one? I'm going to hit generate again. This is going to be really annoying if I do the drum roll every time, but I feel at least compelled to do it twice to like give it a little. Oh, number 10. We can't do number 10 again. Damn it, random.org. This is supposed to be random. Stop it. I got to hit it again. Ready? Number 15. All right. Who's number 15? Darren Williams is our number 2 winner. Darren Williams gets a annual paid membership. All right. Hit and generate again. Number 42. Number 42 is Rhonda Darbooz gets an annual paid membership. And finally, and just for your reference, before I pull this fourth one, the paid subscribers are also included in this drawing. So if you are a paid subscriber and you get one, you'll get like an annual credit, an additional yearly credit. And the last number is number 31, Jay Dixon Jr. So we have our 4 winners. Congratulations. Thank you very much for humoring that process. All right. So we have 4 paid members. Absolutely fantastic. Also, make sure to be subscribed both here, wherever you're watching or listening, as well as to the Substack, because I'll be announcing the next monthly giveaway probably tomorrow morning. So you definitely want to be in on that to figure out what the heck I will be giving away during the month of June. And that drawing will happen probably the first day or 2 of July. Nice little July 4th present for someone. All right, let's go through the markets. I know everyone has been waiting for this part. All right, so we had the 2-year yield up here. And the reason why we had the 2-year yield is because a lot of money is buying into U.S. Treasuries today. This is why I tell you this has the feeling of rate cut. It has the feeling of like the safety, but it also has the feeling of rate cut, which in a lot of cases, especially when the economy is not in good shape, are the same thing. Okay, because a lot of the things that you would buy if you were expecting a rate cut, you would buy if you were expecting the economy to fall apart. And the only difference would be like if you were expecting a rate cut and the economy was okay, you would also see like the averages, the indexes, the casino moving higher, which you're not seeing today. So I'm not saying that won't happen later on this week. We're going to get some employment numbers and stuff like that. But I fully anticipate that, this month, next month, somewhere between now and September, we're going to start to get some economic numbers. Like there's been some leading ones like the PMIs and stuff like that have been absolutely atrocious for months. And then a lot of these lagging numbers, specifically like the unemployment numbers, those are lagging and have been doctored to all hell. Okay. And so they're not showing the actual dismal look of what the economy is right now eventually you will see that, and it will be like a light switch. It will not be, just a slow degradation over time. It'll be like, holy crap, we overstated things by, 5 million jobs, and we have to then correct. And then there will be a big, drop down in the number in the graph, and it'll look funky, and everyone will go, sorry, we took our best guess and we screwed up. And guess what? A lot of people lost money because you'll then see Armageddon happen after that. But that's just the way it happens. Happened in 2008. It's going to happen this way, that way again. So yeah, 2-year yield is down. In fact, all of the treasury yields are down because people are buying U.S. treasuries. What they're not buying is high-grade corporate debt. High-yield corporate debt. And that high-yield corporate debt today on the HYG ETF is down. Again, we held for this second time, made a very strong run up or approach to this overhead line of resistance, and has since pulled back. All right. And so we continue to pull back. So there's continued weakness in high yield corporate debt. Other people, in the past, you might have known this as junk debt. They stopped calling it that, but in truth, that's exactly what it is. It's companies that are dangerously close to going out of business, and the only way that they can stay in business is to continue to get low interest rate loans and bonds in order to finance their operations, because they should have been out of business a long time ago. But the easy money train kept them afloat. Well, that's not going to happen indefinitely, and the interest rates have been, have risen quickly, which means it will take some time for this to play out, but it will play out to the detriment of some of these companies. So these zombie companies are going to go out of business. And right now, today, at least as of today, the big money is not buying high yield corporate debt. So let's move on. Let's look back at the rest of the casino too before we move on to crypto. Like I said, casino's down with the exception of the NASDAQ. So there's a couple of tech names that still remain strong. Again, this is the whittling down of what used to be the Magnificent Seven. Now it's more like the Magnificent Three. There's literally just a handful of stocks that are holding the averages up where they're at. That's not good. Just, I mean, ask yourself this, like, is it a really good economy if, literally there's only a handful of stocks that are benefiting and then everyone else is, just kind of staying the same or even worse off? No, I mean, that's obviously a crappy economy. But that's playing out in the numbers today in the casino. You have basically the NASDAQ up slightly and then everything else down as a result of it. The dollar is down. Again, rate cuts, right? Dollar down. Mostly because of the perceived weakness in the economy. Okay. This is probably front running in anticipation of rate cut news. It could also just be simply the fact that there is a perception that the economy is weak, because it is. And that's the way this is playing out. Volatility is up, as you would imagine, with the markets being down. This is a big story today. Like, if I didn't have the giveaway to talk about, my reference would have been probably towards this. It is crude oil, man. Look at this. Oil is just getting destroyed. And so we got some news. I was actually baffled. We got some news out of OPEC, and they floated this idea that they might release more barrels of oil onto the market. And this is strange because typically when OPEC knows that there's a demand shortage, quite often they respond the opposite way, where they restrict supply so that the price of oil stays high. So even though they're selling less oil, they can make a higher profit margin. Well, it looks like maybe they read an economics textbook and they're trying to see whether or not they can make more money by shrinking the profit margin, but trying to what's the word I'm looking for? Entice purchasers of oil into the marketplace and buy some more barrels so that they make it up in the total amount that they're selling. I don't know if that's actually going to work out, because I think the economy is weak globally. China is weak. They are pretty much the largest importer of oil. The U.S. is weak, I believe, especially from the manufacturing standpoint. So oil is down. It's down because OPEC floated the idea of increasing the supply. And I'm not sure there's any credible expectation that there's going to be an uptick in, business activity or in in consumption activity of oil. So West Texas is down 3.4%. Same thing, close to same thing with UK with Brent. UK oil is below $80. This is like a big deal. The last time we were at these levels was like really early in the year. And then before that was back in middle of 2023. Okay. For a long time, these prices have been supported. And for a large extent, they've been supported by the restriction of the supply from OPEC. And so that just goes to show you this isn't, the oil prices have not been driven by demand. If anything, they're being held up by the restriction of supply, and demand has actually been weak. I mean, even if demand just stays flat, that's not good. And there are actually some numbers, if you follow Eurodollar University's channel, there are some numbers that show that overall energy consumption is down as compared to years ago, which would not, like, you would think, oh, wow, we got like more efficient and that kind of stuff. There's been no advancement in efficiency that's decreased the desire for energy or the need for energy. The only thing that has done that is BS GDP growth on paper, right? Like fake GDP growth, fake economic activity. That's basically where you've gotten this idea that economies are growing, right? When in truth, on like an energy related basis, they haven't been requiring more energy, which typically means economic stagnation or even recessionary kind of environment. So keep an eye on this. This is like a growing story, and this is a huge move for oil. I mean, even in a really volatile market like oil, we'll continue to see how this works out, but this is now 4 days of significant price drop in oil, which some people would say, oh, great, that means inflation's going to go away. Well, yeah, but again, is it for the good reasons or the bad reasons? I'm stealing the Maverick of Wall Street's line. Is oil going down for the good reasons or the bad reasons? The good reasons is supply is increasing and demand is staying strong or increasing, but supply is increasing more than demand is, and that's why the price is going down. Or is it the bad reason, meaning demand is falling, and that's why oil prices are going down, because overall economic activity in the world is going down? Okay. Continue to watch this. I will continue to watch it. I will probably be talking about this more later on in the week to see what happens with oil prices moving forward here. All right. What else are we looking at? Copper is up today, getting a little bit of a bounce. Again, I can't call enough attention to just the psychological inevitability of some of these lines that I draw on the charts. Like, people think that technical analysis is BS. And from a long-term investment standpoint, I agree with you. I don't agree with, long-term investment strategy based off of technical analysis, or at least purely off of technical analysis. If anything, your analysis of the investment, like the fundamental piece of it, should just be, it should play out on the technical side, right? Like, it should be given some confirmation. You shouldn't go the other way around and like try and back into the fundamental piece. Well, some of these resistance lines and these support lines get drawn, and then months and years later, you end up seeing them be points at least of, support or resistance. And so once again, we see copper rose up really strong, pulled back because of profit taking and whatnot, comes right down to this what used to be a resistance line and turned into a support line. And it's proving to be support right now. So we'll see what happens with copper, but it's catching a little bit of a bounce today. And again, the copper story, again, has more to do with, there's some actual support for copper. You could argue it's artificial because of the green agenda that exists throughout most of the Western countries. So that could be a demand issue. It could also be a supply issue, meaning that supply just isn't keeping up with demand, regardless of whether demand stays flat, goes up, moves down. It's just supply isn't keeping up with it. And there could actually be a deficit this year when you're comparing the overall demand for copper to the supply. All right. Also, lumber, weak again today. Look at this. We got this like one little revaluation that happened in lumber. I've been telling you, lumber has been so weak, and it mostly has to do with economic activity. No one's buying lumber. There's no houses being built compared to what we need to be built, which is contributing to the house price quote unquote inflation, which is really an artificial restriction of supply. And look at this. Lumber ripped a couple of weeks ago and since has sold almost all the way back down to where it started before that big pop up. Okay. And what did I say when I last week when we were looking at Nvidia, and the Nvidia chart still looks this way. When you see these big gaps that happen in these prices, okay, typically gaps get filled, okay, and they usually mean some kind of inefficiency in the market. Okay. First of all, efficient market hypothesis is not true. Okay. There are inefficiencies all the time. But knowing that when there's a lot of inefficiencies compared to what there normally is, that's a really bad sign. Okay. And so when you see things that are gapping up and gapping down like this on the regular, it's not a good sign. Just isn't. It typically means there's a problem with liquidity. There's really bad asymmetric sharing of information so that a few people know that like things are really good or really bad, and then everyone else is completely in the dark. That's typically what happens when you get these big gaps in these charts. Lumber had this big move higher. All of a sudden, there was like some kind of relief. Nope. Like right back down. Look at that. So lumber still down below 500 on the futures. So keep an eye on lumber too, because this is going to be another big telltale sign. Lumber, oil, copper has a little bit of a unique circumstance going on right here. Interestingly enough, I talked copper with Lobo on that interview that's dropping tomorrow evening. So keep an eye on it. I'll probably put it out around 6 p.m. Eastern. So keep an eye out for that. If you're on the YouTube or the Rumble channel and you're subscribed, fantastic. If not, definitely subscribe and make sure to get the notification set up so that you get that notification when it sets to go live an hour or two ahead of time. All right. Gold and silver, the darlings. Gold is strong today. And as I talked about last week, gold was poised to outperform silver for a period of time. It is playing out that way, at least recently. Today, they're about even. But the gold to silver ratio, because gold is starting from a higher price point, even if they're even, that gold to silver ratio gets higher because of the price move of oil. The price move of gold ends up being a higher nominal amount as compared to silver if they move up the same percentage. So gold is about as strong as silver. Silver's slightly stronger than gold today, but they're both catching a bid. Look at this. Gold is holding this trend line here, which is created this wedge looking pattern. Okay. This wedge looking pattern looks like it'll take probably a month to 2 months to play out. So we'll have to see what happens. I fully expect gold to continue to be strong here. And in fact, I would love to see this play out to the upside, but there's no guarantee. Whenever you have a wedge and you get to the end of the wedge, if you haven't had a strong move above or below the wedge before you get to the end of it, it will show you how it's going to resolve at the very end of the wedge. And if there's no catalyst for it to move in any one direction, then a lot of times you get weakness. So I would anticipate this is all kind of like coming together, right? Like I said last week, there's all these kind of like, you would think the market was quote unquote rigged from the standpoint of people know something's going to happen and then it just so happens to happen and they make money off of it. That's true for some of the people in the market. For most of the people in the market, they're just kind of playing the averages, right? Like they're playing probability and percentages. And so when it comes to something like this, where there's this kind of wedge pattern, we're seeing a lot of those wedge patterns throughout the entire marketplace, whether it be commodities, whether it be in the casino names, the stocks and the indexes, even in the cryptos. Okay. We're seeing these wedge patterns play out and a lot of them resolve at about the same time. So we should have an answer between June and July. So by the end of July, we should have some sense of where gold is heading, silver's heading, crypto, oil, et cetera, et cetera, et cetera. Okay. Gold strong today. Fantastic. Silver's also good today. Silver pulled back, retested 30. What did I say? I wanted it to make an actual retest of $30. Okay. Now, what's not great is silver's wedge pattern is a little tighter here and it pulled back. But then again, this could just be a short-term violation. It could find its way back up into this wedge area. And then depending on how it plays out over time, my wedge actually might have to grow a little bit depending on what the price action looks like. But from this standpoint right here, I think it's a good thing that silver came back, retested $30 an ounce, and has since found good buying support off of $30 an ounce. I do believe silver continues to move higher, especially if we get rate cut news in the future. So something to pay attention to moving forward. Aluminum's finally pulling back a little bit. Again, this story has to do with the tariff type story. The reason why aluminum's strong is because everyone assumes that Trump is going to enact tariffs. Okay, Biden's now rattling the tariff war drum. Okay, what's funny is I've had some back and forth with people online for the last couple of weeks, and I'm like, dude, depending on how bad this economic situation ends up looking like, and you know the truth of it, because we're not being told the truth in the numbers right now. We have to wait for that to play out. So technically, you won't know how bad it is until 6 months in the future. But depending on how bad this is like Smoot-Hawley 2.0. And if you don't know what I'm talking about, during the Great Depression, to add to the misery and the stupidity of all of the policy changes that happened, okay, which by the way had to do with the emergence of the central bank. It had to do with the emergence of really stupid interventions into the market in terms of how gold is looked at, as far as money. What they said was lack of regulations, which really wasn't lack of regulations, that ended up causing the casino to tumble during the Great Depression, or just before the Great Depression. All of these things seem to be repeating themselves in one way, shape, or another. And Smoot-Hawley was essentially the beginning of a trade war that happened in the midst of the Great Depression, when really what was needed was good trading in order to rectify all the price discrepancies that were happening. On top of the federal government going in, trying to support prices for farmers, so people don't have 2 cents to rub together in order to feed themselves. So then what they do is they go to farms, and to support the price of food, as opposed to allow people to buy cheap food, they wanted to protect the farmers. And so what do? They go and slaughter livestock and burn crops and all kinds of other stuff and pay the farmer out money, thinking that that's going to fix things, right? Absolutely ridiculous. Well, part of that insanity was the Smoot-Hawley Act, which was essentially tariffs on foreign goods, and it caused a trade war that created much more misery than even before that. And so it seems like that's going to play out again, regardless of who you get as president. If Biden follows through on his promises, or Trump follows through on his promises, tariffs will follow, and you will get Smoot-Hawley 2.0, and it will make the recession that we're either in or headed into that much worse. Okay? So just something to keep in mind. That's what's governing aluminum right now. Even though aluminum is weaker today, it's had a huge move, so there's going to be some profit taking. We'll see whether or not it continues higher. But when I actually initially talked about this issue too, the amount that since Biden started talking about it, the amount that aluminum has moved up in percentage terms actually corresponds with what the anticipated tariff is. So that's the other dynamic here, is we talk about it all. I talk about it all the time with point stimulus, right? Like stimmy checks and cash flow clunkers back in 2009, right? Like all these kind of individual manipulations in the market, they almost get baked in immediately, right? Subsidies for electric vehicles. So what happened? They passed subsidies for electric vehicles. Oh my God, it's going to make it so much more affordable for the average person to have an EV. Then you come to find out that within a week, Ford and GM and all these companies had just basically raised their prices exactly as much as the subsidy. So, it is what it is. Brilliant people doing brilliant things. That's really it for the casino. I can look at the stocks too. There was also this funny little bugaboo today, and I'll just pull this up for the laughs here. Berkshire Hathaway, okay, Warren Buffett's company. Berkshire Hathaway today, and this isn't the only company this happened to, but look at this print on the chart. The New York Stock Exchange had all these anomalies that happened today, which is always really suspect, okay? Berkshire Hathaway, which goes for over $600,000, the A shares at least, go for over $600,000 a share, printed $185 or something. And so there was some erroneous trade that happened down here at $185. They had to halt things, try and reset everything, go back through the book of all the orders and rectify things. Obviously, they throw out, when you're like, oh, I got Berkshire Hathaway A shares at $185 a share. No, you don't get it that way. They reverse it and put it back. That's the lunacy that's happening today as far as that goes. just in case you think there are really intelligent people managing these markets. And speaking of intelligent people and markets and stocks, GameStop, dude, stonks go up, nothing but goes up, right? Apparently, the dude who is the big fat cat over there, who's been pushing this GameStop narrative and the over shorted stock that it is, which is not wrong, but it's just, I think some people don't truly understand how Wall Street works. He revealed that, I believe on Reddit that he posted, he has something like ridiculous, like $100 million, over $100 million in a, options position between stock and options on GameStop. And the goal is that he's going to exercise the options come, I think it's June 21st or something like that. And there's not going to be enough shares, and GameStop is going to go to literally infinity dollars, because there's no way for these hedge funds to locate all of the shares in order to fulfill all the options contracts. I don't think it's true. I think they're more than prepared to be able to essentially fleece this guy and fleece every single other person that follows him into this trade. I mean, just today alone, the thing ratcheted up to $40 a share again, and it's all the way back down below $30 a share now. So yeah, it's up 27% on the day. But again, if you bought it open, you're down like 25%, right? So what an amazing investment. Buy in the morning and bang, like an hour later, you're down 25%. That's an incredible investment. We'll see how this plays out. Continue to watch it. The other stunk names are up too, like AMC. We'll see what happens. I mean, look, more power to them. If the options play actually works out, fantastic. But I mean, you're also talking about financial Armageddon, which is another reason why you should probably not be involved in the casino right now. But yeah, I mean, it just is what it is. I mean, the apes are at it. They're pounding their chests right now, thinking that they're going to be billionaires when the billionaires are forced into being paupers. We'll see whether that happens. I mean, they run the game. So just remember, if you figured out a way to game them, they'll just shut off the lights and do things behind closed doors. I mean, it's just what happens. All right. So that's it for the casino. Let's look at crypto really quickly before we wrap up. Bitcoin's up today. It's up about 1.9%. It was up a little bit more. Again, look, another flag pattern playing out here. That's on the weekly chart. I'll pull up the daily. So you have another one of these kind of like wedge flag patterns that's happening within Bitcoin. And, we have to see how this resolves. Again, these lines that I draw, they seem silly, but, other people draw the same lines and they work with a whole lot of money. And a lot of times the computer programs also use the same lines. And so what happens is it comes up to the line, and then that's where the high of the day has been, and then it pulled back from there. Okay. The other significant line here that we're hovering right around is basically 69,000, which is the top end of the earlier consolidation range that we looked at when this all kind of started to get set up. Okay. Well, it's hovering around that 69K. It challenged the psychological number of 70,000 earlier today, and that's where it pulled back from. We continue to see how this plays out. We're coming up, and again, this wedge should resolve probably more to the end of June. So within 2-3 weeks, you should probably see a resolution within Bitcoin. Again, you could see resolutions in the other things as well, like gold and silver. It could happen along with Bitcoin a little bit earlier. Bitcoin could also resolve a little bit later too, where you see a breakout, it's a false breakout, and then eventually it, falls down, or vice versa. It breaks down and then eventually rallies. But you typically have a decent idea of which direction it's headed once these wedge patterns resolve themselves. And we're coming to a head here. So we'll see what happens in the next couple of weeks. I continue to hold thinking that this is an inverted head and shoulders. You will see a push through at least to like 76 or 78,000. And in fact, depending on the thrust and what's causing the thrust, you could see something on the order of, 100K or 115K on Bitcoin. And that's where I would expect it to top out. I would not expect it to re-challenge that level once it hits it for a long time, if it ever does. There has been some news as far as Bitcoin in terms of them, entertaining the idea of increasing the block size, meaning increasing the amount of transactions within a block, which also increases the amount of transactions per second or per minute that the blockchain can handle. So that's out there. There's something else. There's also some like virtual debit cards and things that are being released that are trying to get Bitcoin back on this road of being a transactional currency. We'll see whether or not that moves the needle. I really don't think it does. I think what moves the needle is rate cut or no rate cut. That's basically what everyone's waiting for. I made the call on Friday that it was more buying more Ethereum than Bitcoin or gold and silver. That still remains the case. I think Ethereum looks like it has more of a tailwind. We'll have to see how that plays out. Again, a lot depends off of what news actually ends up being the catalyst. Is the catalyst the Ethereum ETF? Well, then Ethereum might benefit more than some of the other cryptos that are out there. If the catalyst first ends up being rate cuts, you might actually see Bitcoin outperform. So I've bought more Ethereum recently, not overall, but recently than Bitcoin, just out of anticipation that I think the ETF news will probably come out first before the rate cut stuff. But we'll see. That's just kind of a coin flip. It's why I'm playing both sides. But I do think both of them move higher here, at least in the short term. I'm also not advocating for trading. You got to remember that. Regardless of when I say I'm going to take like profit off or something like that or reallocate funds, I'm not like an all on, all off kind of person. Okay. That being said, if Bitcoin spikes big time, I'm definitely taking a good portion of the position off because you want to lock in those profits and not necessarily just ride the roller coaster up and then all the way back down again. Tons of people have done that with Bitcoin. The people who have made the most amount of money haven't been the hodlers. They have been the ones that have, bought low, the thing ramped, they took profits, waited for it to come back again, bought again, it ramped, they took profits, et cetera, et cetera, et cetera. All right, what else is happening in crypto space? A lot of crypto is up. It's not up as much as Bitcoin. So a lot of that has to do with Ethereum being slightly negative today, with the exception of, a couple of other smaller cryptos. But for the most part, the crypto space is higher. So Bitcoin Cash is up, BSV, Bitcoin Gold, Solana, Avalanche, all the usual customers. XRP has gotten some favorable news from the SEC in terms of them. Looks like they're going to beat the SEC charges and whatnot. But to celebrate that, they're then going to, I guess they have a reserve of Ripple / XRP that they're then going to like 400 million coins or something that they're going to end up dropping. and we'll see what happens to the price on this. I mean, in the past, it hasn't made much of an effect. We'll see what it does now. But I do know that when you increase the supply of something, typically it becomes less valuable. So we'll see. We'll see how that goes when they drop 400 million onto the open market, 400 million XRP tokens or coins. Yeah, what else? Hive. I actually wrote an article today on the Substack about Hive and Hive-backed dollars. Hive-backed dollars are the stable coin that's associated with the Hive blockchain. The savings account for Hive-backed dollars pays you 20% APR. I need to say that again, 20% APR for Hive-backed dollars that you have in your savings account on the Hive blockchain. This is a blockchain that is going to stand the test of time. There's been some growing pains. There's a ton of development. There's a ton of new projects coming online. There are also other projects that have gone by the wayside, but that does not mean that the blockchain is failing. It just means that there's literally an incubator of innovation that's happening. Some things are succeeding. Some things have a little bit of staying power and fall off. Some things, die right out of the gate. That's the nature of innovation and being on the front end of, a decentralized blockchain, decentralized app innovation and creation and development, and, DeFi and NFTs and all the rest that come with this kind of technology. So I continue to watch it. It continues to be my single biggest crypto holding. It's also a place where I post a lot. And that's part of the reason why it's my biggest crypto holding, is because I get rewarded for posting and creating content on the Hive blockchain. So definitely check out that article earlier today. I highly doubt you're getting 20% APR somewhere else, besides maybe your credit card, which is like the opposite. But yeah, I highly doubt you have a savings account that's paying you 20%. If you do, I would like to know about it. Put it into the comments, and we'll look at it and kind of beta test it. But yeah, some other micro cap cryptos are down, but really that's it. KAU and KAG continue to be strong. And again, that has to do with the price of gold and silver. So I continue to hold on to my Kinesis Money account and continue to kick the tires on that. I've been pretty satisfied. I mean, it's very functional, very easy to use. What sucks is I'm in the United States, so I can't have a virtual debit card that's attached to it. And the app also hasn't been approved because the app has access to the virtual debit card. So we'll have to see whether or not it actually gets approved in the US or not. I hope so, but I'm not holding my breath. But as far as a platform goes for holding on to digital, like crypto gold and digital crypto silver, meaning the marriage between those two things, it's been everything I expected to be. So that's an endorsement there for Kinesis Money. If you want to start an account and try it out, you can fund it however you want. I funded it with just a little bit of Bitcoin just to try things out, and I was impressed with it. So I'll probably do a full write-up. I've done one prior in terms of like the very beginning part of it. I'm going to have to do a follow-up write-up on that as well to let everyone know, how it's going. So whether or not the initial impression holds up over time. So with that, that's all I got. It's a Monday. I hope everyone has an absolutely fantastic afternoon. I appreciate you guys sticking with me, all of your attention, your energy. I love it. Helps me out, helps other people out too. And like I said, do anything that you can for the algo because it not only helps the channel, it also helps others that are out there that could use this information. So with that, I will be back here tomorrow, Tuesday. I'll be announcing another giveaway, which is super fun. And yeah, keep an eye out for that interview dropping tomorrow evening. It's going to be a fantastic one. So with that, everyone have a fantastic afternoon. I love you all. Peace.
Stuck in a system that just ain't right.